Ladies and gentlemen, I'm your host tonight, Raymond Ling from Singapore. Welcome to the presentation tonight on investment in high performance fund with Triumph. Our presenter tonight is Brian Coucher from UK. He used to be a part-time driving instructor and experienced investor in stock markets and property for over 40 years. In November 2020, Brian started this investment opportunity with a small amount but quickly realized the potential. Today, he is retired from his job due to this passive investment with Triumph Private Funds. So if you have any question during the presentation, you can post it in the question box, and we have also put up some important information links in the chat box as well. Now let's hear from Brian.
Thank you very much, Raymond, and welcome everyone. Good evening if you're watching from Singapore, Malaysia, or surrounding areas. Good afternoon if you're watching from the UK or from Europe. It's absolutely glorious day here. I'm actually sweating. I've got the window just in front of me. I'm in East Sussex on the south coast of England, about 50 miles south of London. It's absolutely glorious day. And we've got it's been brilliant for Wimbledon as well. Every day has been sunny, including today. So let's get cracking. And just before we start, what is the economic situation? Certainly what we're facing here in the UK. It's what's called the perfect storm. We've got very low interest rates on savings. You go to Bank of Building Society, it's less than 0.5% per annum, compared to soaring inflation up around 9-10% and rising, rocketing energy prices, and a lot of uncertainty, especially with the change of government in the UK, Ukraine, COVID, etc. So a lot of uncertainty in the world, soaring inflation, but very, very low interest rates. So if you've got money sitting in the Bank or Building Society, it is losing you money in real terms, because inflation is around 10% and interest rates very, very, very low. So you need to do something, and what I'm going to present is just one opportunity to perhaps address this situation. So I'm going to be talking about something that I've actually invested in myself, talking for about 40 minutes. I'm going to be telling my own journey, and don't worry, if you're watching this for the first time, there's no sales pitch, there's no special offer at the end of it, and I'm not legally allowed to give you financial advice. What I can do is just present to you an opportunity which I have invested in myself. Please do take your own advice, and if you do wish to have it go, start with a very small amount and then just take it one step at a time. But that is entirely, it's your money, your decision. So my own journey, I started investing in stock markets back in the early 80s when our Prime Minister at the time, Mrs. Margaret Thatcher, started privatising utility companies such as electricity, gas and the water company. I then built and sold a telecoms company. I thought, what am I going to do with the money? And my two oldest children, I have 4 children, the 2 oldest were just starting university. So I became an accidental landlord when I bought properties for both my son and my daughter, who just started life as at university. And since then, I've gone on and built quite a substantial property portfolio. In 2016, I became a part-time driving instructor. And I sold one of my properties in mid-2020, and I had the proceeds sitting in my bank. And I just thought, what am I going to do with the money? So I thought, okay, I know, I'll put the money in a property development. I'll try and fund it. And the sort of rates that you could receive as an angel investor would be between 1 and 1.25% per month. And that's what I was looking for. And I phoned around quite a few of my property contacts. Nothing really of interest came out from it. And then I spoke to another one of my property contacts, a gentleman I've known for about 15 years. He lived quite close to me, and he said, well, I don't know of any property projects, but I have been investing in some managed funds for the last 6 months, and it's going rather well. Would you like to come and have a look? So I thought, why not? I'll go and have a chat to him. His name was Gareth. He lived quite close to me. So I thought, at worst, it's going to be an evening out and have a couple of beers with a friend. So I went round and he showed me what he was doing. And at first, I didn't really like the look of it, this thing called FX. I just thought, that's scary. I've heard of a lot of people that have put money into such schemes and had lost it. So I was very, very against it when I first started. But I decided to open accounts. Gareth suggested that I just open accounts, don't put any money in, have a look from the inside. Just check it out for yourself. And so I did. And I saw the same slides that you're going to be seeing very shortly, obviously updated because that was about 18 months ago. And the 3 key questions that I asked myself at the time was, is this something that's legal? Is this a really, really good investment, something that's legal and it's got longevity, sustainability, or is this one of the many scams that you hear about? That's the key question. So is this company called Triumph? What are they? Where are they? How big are they? How long have they been around, and are they going to be around? Can I trust them with my money? Secondly, the returns, are they just made up figures? How can you prove that these returns are credible? And thirdly, is this a sustainable business in the long term? I don't want to put my money in and then find in a year or 2 years' time that the walls come tumbling down and the whole thing is a complete mess and I've lost my money. I want something that's going to be around for 5 to 10 years. And I spent 3 months doing due diligence. I worked really, really deep. The only thing I didn't do was actually go out to meet the directors of the broker. And then that, because of COVID, I actually did that along with a lot of other people last month. And I'll talk about our trip out here. So I spent 3 months doing due diligence before I put any money into any of the funds. And my first investment went in on the 10th of February, 2021. So I've been an investor in these funds for just under a year and a half now. So what I'm going to take you through is a very similar presentation to what Gareth showed me nearly 2 years ago. First of all, we're going to be looking at what is this thing. I appreciate there are some people on here who all want detail, others just want to get to the facts and figures in part 3. So hopefully I've got a balance. I'm going to go through the market overview and what is this thing called a CFD, or contract for difference. Secondly, we'll be looking at broker. Then the exciting bit, the fund managers. These are the guys that make us the money. A little bit about risks. And then if you wish to take it any further, I'll show you what you can do. And then there's time at the end for questions and answers. Please do feel free to put your questions in the question box, and they'll either be answered as we go through, or we'll cover them at the end, and I'll do my utmost to answer them for you. So let's get cracking. Part 1, market overview, and this thing called a CFD, or contract for difference. What is it and what makes it special compared to other investments? Well, a CFD, if you ask your parents or grandparents what CFD is, they probably won't know, because it's only been around for about the last 30 years. It was developed in the 1990s in London, and it allows financial traders to trade the price movement of an asset such as gold or silver or oil or foreign currencies without actually having to own the asset. So you're not investing in shares or in gold or in oil. What you're allowing the traders to do is to trade price movement. Now, the key thing about this is what makes it so different to other investments, is that traders can trade price movements both up, it's called a long, or when the markets are going down, they can just do the trade in reverse and make money. So long as they call the market correctly, they can make money when markets are rising or falling. And that is what makes this so different to normal investments. Certainly, compared to anything else I've invested in over the last 40 years, this is something completely different. On every contract, there's both a winner and a loser. And the way to make money in this is to make sure that you're on the winning side of the contract. How big is this market? It is absolutely ginormous. It's the column on the right-hand side, global over-the-counter derivatives. There's another way of describing contracts for different CFDs. It is absolutely huge, 693 trillion US dollars. I can't get my head around that size, but what I can do is compare it to the size of the global real estate market, worldwide property, all the properties worldwide, valued, the column in the middle, 70 trillion US dollars. Well, what we're trading, or the market that we're in, something is 10 times the size of the entire global property market. So it is absolutely huge, and it is very fast moving because it's only been around for about 30 years or so. So plenty of opportunity to make money. Yep. Also plenty of opportunity to lose money if you don't know what you're doing. So how do we access this market? We access it through one of about 2,000 brokers worldwide. The broker I'm going to be talking about this evening is Triumph. And in my own opinion, there's nothing special about Triumph. They are just one of 2,000 brokers worldwide. And you can either be a retail trader. That means you have the systems, you do all your own trading, you sit and watch the screens, you press the contract entry, you press the contract exit when you want to come out of it. And the beauty of that is that you get to keep 100% of the profits that you make. The problem with that is that 90% of people lose 90% of their money in the first 90 days. It is stressful, and it is a good way to lose money because it's called the amateur side, the retail trader. Yes, you can make money on this side, but the vast majority of people actually lose money on this left-hand side. So that's not what I'm going to be talking about. If you want to do that, I wish you every success, but that's not what I'm here to talk about. I've had a go at retail trading, and I was one of those 90%. I lost money over about a 3-month period. So I'm not talking about being a retail trader yourself. What I am talking about is putting your money into a managed funds like the unit trust or investment trust or pension scheme, and allowing teams of professional fund managers, or in our case, professional trading teams, to do the actual stock selection or trades on our behalf. They do that, we just sit and watch. So in the football terms, on the left-hand side, you're on the pitch playing. On the right-hand side, you're in the stands watching. If you wish to, you don't even have to be in the stands. It will go on. On the left-hand side, it is active because you have to sit and watch your trades. On the right-hand side, it is completely passive because you let teams of professional traders do the trading for you. So I'm not talking about retail trading. I am talking about the easy way to get into this market is to put your money into managed funds and allow teams of professional traders to trade for you. They tend to be people, about 6 to 8 people, typically in a team, and they're from all over the world. And I'll show you some of the funds in a short while. And they've got between 10 and 15 years individually and experience with some of the big investment banks such as Deutsche Bank or HSBC or Goldman Sachs. And they've left and they've set up their own private managed funds, and they ask Triumph to do the administration of it, to take the deposit monies, to administer the profit distribution at the end of the trading cycle, and to allow us to withdraw our money. So this is just one. I did a Google search on retail CFD trading, and there's one of, or there's about 20 or so such companies that list, but look that legally they have to put up what percentage of people lose money. So 74% of retail investors, that's people on the left-hand side, lose money when trading CFDs with this provider. And that is very typical of the industry. So I'm not talking about doing your own trading. I'm talking about letting professionals do it for you. So how do they make money? Well, in a rising market, everyone can make money no matter what asset you have. If you've got shares, or if you've got gold, you buy low, wait for the price to go up, and sell high. And you make profit between what you sold it for and what you bought it for. So a trader's strategy here is buy low, wait for the price to go up, and sell high, and make the difference between the buy price and the sell price. But what happens when markets are going down? Well, if you hold the underlying asset, let's say you own gold, if the price of gold goes down, so does the value of your investment. And that's the big problem. Or BT shares, or shares in HSBC. If you own shares, you're in the market at all times, and you're open to the volatility of the market. Markets can go up and they can also go down. But in our case, the traders can still make a profit. And that's why CFDs are so powerful. Because so long as the trader calls the market correctly, they can make a profit when markets are falling down by doing what's called a sell contract, or shorting the market. So they sell here. They don't actually own anything, but they enter a sell contract here. And remember, they're trading price movements. They wait for the price to go down, and then they buy it back here to balance the books. And they make their money from the difference between what they sold it for and what they bought it back for sometime later. So they can make money when markets are going up or going down. So people say to me, oh, markets are going to go down now because of all this uncertainty in the UK. Happy days. They just love volatility. It does not matter which way the market is going. So that explains, hopefully, gives you a flavor as to what this is all about. Now let's have a look at the broker Triumph FX. Now this is the key risk, if you like, in this, because everyone's heard of people that put money into crypto or FX, and then the broker just disappears into thin air and their money is gone. So if you're going to enter this market, you must make sure that the company that you're going to be investing your money with is absolutely legitimate, bona fide, regulated, and going to be around for a long time. So let's have a look at some of the key facts. First of all, they're incorporated in 2009, so in their 13th year of operation. Now that's a really good start, really good sign. They're fully licensed and regulated, and I'll show you who they're regulated by shortly. And when I went out to meet them, they actually told us, and I have no reason to disbelieve them, that they are the largest broker for managed funds with over $1 billion of assets that they manage in these managed funds. So they're the number one broker worldwide for global funds, or managed funds. Headquarters in Limassol, and I've actually been out there with a number of other investors. We went out there last month just to meet them. They're in southern Cyprus for three good reasons. First of all, it's a low tax regime. Secondly, they need to be based in Europe to have access to the European market. And thirdly, there's a lot of English-speaking employees available in Cyprus. So those three reasons why Triumph and also a lot of other FX brokers are based in southern Cyprus. Now, what I suggest you do, if you want to have a look at this yourself, do your own due diligence, is to just do a check. Type in CYSEC, C-Y-S-E-C, that stands for Cyprus Securities and Exchange Commission, then a space, and then 293/16. 293 is their license number, and well, the 16 means it was first granted this particular license in 2016. They also have another license, which covers the international fund management side. That was granted by the Republic of Seychelles, and you can check that one out as well, SD080. And when I spoke to the compliance officer in Limassol last month, she actually told me that they have applied for 2 further regulatory licenses, well, just to strengthen their position. So this is a very, very tightly regulated business. If you do the Google search, this is what you'll find. This is a screenshot of the Cyprus government, the CYSEC website, and you can see Triumph's entry here. It is 293/16, and the 16 here is because it was first granted in 2016. It's also covered or regulated in 28 other European countries. It used to include the UK until Brexit happened on the 1st of January 2021. So very, very tightly regulated regime. And this is myself on the right-hand side. That's me, and that's my friend Gareth. We're outside the CYSEC offices in Nicosia. This is not what we expected. We expected to be a little office in an office block, but no, this is a purpose-built building over 11 stories, and the CYSEC occupy the entire 11 floors, and they regulate over 200 such brokers in southern Cyprus. So very, very impressed with this with the regulators when we went to visit them. This is the license for the Seychelles license as well, SD080, granted fairly recently in September 2021. What I also did when I was doing my due diligence was to go on some credible review sites, and the best one I could find in terms of credibility was trustpilot.co.uk. So I recommend that you have a look yourself, go onto trustpilot.co.uk, enter Triumph FX, and this is what you'll find. I read all 154 reviews, and overall you'll see that they're regarded as excellent with 4.4 rating out of 5. And in my opinion, that's about right. They're by no means perfect, but the core bits that they do, they take the monies, they're safe, they administer the trades, and they do the profit distribution at the end of the trading cycle. They do that absolutely brilliantly. What they're not particularly good at, and why they've been scored lowly here, is their customer support. Sometimes it takes about a week to get an answer from them, and that's why they've been scored lowly down here. But overall, very satisfactory. And I actually took that up with the directors. What are you doing about your customer service to bring it up to levels of good and very good where the other parts of the business is? And they said, yes, we understand. We're growing fast. We've had COVID, and our customer support is fragmented. Please accept our apologies, and I understand that we are working on it. So fair enough. But 4.4 out of 5 is a pretty reasonable rating from here. And that's about right in my experience. They're not perfect. They do the core things very, very well, but their customer service could be improved. And that's my own personal opinion. These photographs were taken pre-COVID in 2018, and you can see the name of Triumph here in the offices. And this is what we went to visit last month. They're also very big in the exhibition side, and they're just getting back into the exhibitions as well. Now we're thankfully through the worst of COVID, and this is myself outside those same offices. Behind me is a big black. This was the first electronic billboard that was going up in southern Cyprus, and it's going up on Triumph's offices. They occupy the whole of the second floor here, and this is at the entrance. That's where they are, and this is me in the reception area. So they really do exist. I've knocked on the walls, I've met the staff, I've been into their offices, and they are genuine, they are real. That's myself in the middle with the CEO on the left-hand side and the chairman on the right-hand side. I also met up with the compliance manager as well. So very, very interesting to hear from them. And they also presented on the left-hand side, that's the CEO presenting where they've been, their story, and also where they're going from. And on the right-hand side is the commercial director, Kelman Oy. He's responsible for Asia and the South Pacific area. Very, very interesting gentleman. He knows an awful lot about trading. So very, very good. I was very, very impressed with these two people when we met with them and when they presented their story and their company history and where they're going. So very, very good, worthwhile trip as well. So that's us outside the building as well. They were very, very forthcoming. They answered every single question that we had. And we also had some great entertainment as well, typical Cypriot hospitality on a couple of evenings. Great time, very, very worthwhile, both from an enjoyment point of view and also from a business point of view, checking this out, doing our thorough due diligence. Okay, so let's move on now to the exciting bit. So if you just want to see the results, this is the time to put your phone away or put your cup of coffee down, because this is the exciting bit. The fund managers do not work for Triumph. They are independent. They've left corporate world, typically an investment bank, a team of 6 to 8 traders. They have set up their own private managed funds, and they've gone through at least 6 months of trials before Triumph would take them on. They are organized into networks. And the beauty of this is that you've got a lot of choice. You've got freedom of choice to choose which funds you put your own money in. Some of them have, let's go through. I've got my money actually in 8 different funds. So I've not got all my eggs in one basket. As the name suggests, Tokyo's finest. They're based in Japan and they trade primarily gold and silver and the Japanese yen against other major currencies. I've also got my money in the AMG network. These boys are based in New York, ex-Goldman Sachs traders. Guardian, GMC, Guardian Management, based in London, again, trade primarily gold and silver. EOB, based in the Far East, do a lot of trades, trade every day, primarily foreign currency pairs. Oilix, as the name suggests, they trade contracts in WTI, West Texas Intermediate Oil. They're based in London. And the two funds over here, the Yuri and the Nikolai, both long-serving fund managers based in St. Petersburg. Now, people say to me, I don't want to put my money into anything to do with Russia. Okay, fair enough, that's your call. And the beauty of this is that you're free to move your money about. You choose which funds you want to go into. And if you're not happy with anything, either the morals or the performance, you just take your money out and move it around. And I have done that, exactly that. At the end of the trading cycle, you can move your money back. It's completely free of charge to do that. And you choose, if there's anything you're not happy with, you just take your money out of that particular fund and move it about. You've got freedom to do so 10 times a year. And we do move our money about, not just our profits, but our capital. And we have complete control. It's at our fingertips, and we do it regularly. Now, this is the slide. When I first saw it, I just thought, this cannot be real. But I've actually been in Triumph now for over about 17 months, something like that. So I have personally seen all these trading cycles go through, and I can personally guarantee and vouch for the fact that these figures are correct, because I've seen them in my own wallets. I've actually had dollars come back. So let's just go through and explain what this means. The funds on the left-hand side have 5-week cycles. So there are 10 trading cycles per annum. Now, these are the net returns, 7.3% net return in the 5-week trading cycle, 8.7% net return in the next 5-week trading cycle, and so on. And then down here, the annual net profits, 76, 83, 79, much of a muchness, but incredibly consistent. The beauty of this is what the most important thing for me is there are no zeros and there are no negatives. They all make a profit. They don't get every trade right, but over the course of a trading cycle, they get something between 80 and 90% of the trades right, and they always, in my personal experience, they've always made a profit. All of the funds that I've invested in, I'm invested in 8 separate funds, and they've always made a profit. Sometimes more than others. EOB, for example, went through a bit of a poor phase here. So what I did was I actually took my money out and put it into other funds. I'm now putting it back in again. The funds on the right-hand side, by the way, are monthly. So there are 12 trading cycles for both EOB and OILEX. And on the left-hand side, there are 10 trading cycles here, but very much of a muchness. And I've got my money spread across 8 different funds that I've not bought all my eggs in one basket. Let's have a look at one of them. This is one of the 2 funds based in St. Petersburg. Again, I stress, if you don't want to go into anything to do with Russia, then don't invest in this fund. There's plenty of other choices, but I just choose this one because it's the longest running of the funds that I've invested in. This has been going for nearly 3.5 years now. It's in its 35th trading cycle. Every single trading cycle is profitable. Every one. The worst trading month of the year is number 27, and they only made 7.008 percent net profit. Phenomenal. And now these figures assume that you take your money out at the end of each trading cycle and to give the annual returns. If you leave your money in, you compound it, then the returns are even higher, up towards 100% in a year. So very, very profitable, very consistent returns. That's what I found in all the time that I've been involved. Let's have another look at one of the other funds, the AMG. These traders are based in New York. They do a lot of gold trading. Again, very, very consistent returns over 23 trading cycles. So that's about 2.25 years, just over 2.25 years. 23 trading cycles. Every single one has been profitable. Do they win every trade? No, they don't. This is just a snapshot, but it's a very representative sample. They win about 84 to 16, this particular fund, and that's fairly representative of all the other funds as well. But so they don't get every trade right, but they make enough trades correct each trading cycle to make sure that they make a profit. The darling at the moment is Tokyo's Finest. That's the highest performing fund right now. It may not be next month or the month after, but right now, that's the sort of returns that these funds can make. Let's have a look at one of my funds. This is the Tokyo's Finest. And look here at the type of trades. So buy. So buy is they're expecting the market to go up. Buy, another one expecting the market to go up. Then they did some sell contracts. So they're expecting, in this case, XAG, that's silver. They expected the price of silver to go down, so they entered a sell contract. And over here are the profits, so they got that one correct. So that the profits that they made, this is the gross profit, $2,000, $731, and then the minus $7,745. Don't worry about that. I'll come back to that in a minute. Then another successful trade, another one here, and then they got one trade wrong. So they're not perfect. They do get trades wrong occasionally, but look at the size of it compared to the size of the winning trade. So $4,269 profit in that trade, fantastic. But look at the size of this one here, minus 383. Yeah, you don't like to see losing trades, but this is a very, very well managed fund. They saw the price going the wrong way compared to what the contract that they'd entered, so they cut their losses and got out. So their stop loss kicked in very early, and they got out of here, so the losses didn't have time to compound. So very, very impressed with this. It shows me this is a very, very well managed fund. Now the minus 7745, that is not a loss. That is the the gross profit from the previous 5-week trading cycle coming out of the fund. So it's a net movement out of the fund. That's why it's a negative, and into my trading wallet. And that's what happens at the end of each trading cycle. The profits come out and into your trading wallet. Now you can put them back into the same fund. You can bring them back to your home bank, which is what I do every month, and I take my dividends. Or you can move them to another account. So you've got complete control of your of the money that's in your wallet. It doesn't get locked in here. It comes out at the end of each trading cycle, and you're free to do whatever you wish with it. What I also like about this investment is this is a screenshot from the Triumph website, and you're encouraged, and it's made very easy for you to download this industry software called MetaTrader 4. If you don't know what MetaTrader 4 is, it is the software that all FX and commodity traders use. So in the UK, good analysis is MetaTrader 4 is to FX traders as Rightmove is to estate agents. It's completely independent software, but it's the software that everybody uses to trade with, and it's completely transparent. And so as long as you've got the correct passwords for each of the fund managers, you can track their trades in real time. So there's no place to hide losing trades. And Triumph are very very open about it. All the funds, their passwords are clearly available on each of the funds. So you've got the trader's name, you've got their login, and you've got their password. So you can see the trades in real time if you choose to. I don't do it myself. I don't want to go into that level of detail, but I run a WhatsApp group, and there are quite a few people on here that do exactly that. So you've got complete independent proof that what you see in your Triumph account is indeed accurate. So you've got 100% transparency and complete independent proof that what you see in your account is genuine. You also get, in this particular fund, the EOB fund, I like this one, you also get summaries of what the trades that they did for the previous week. So in this particular week, EOB entered 6 trades up here, and they got this one right, this one right, this one right. This one they got wrong, so they made a loss of 0.44%, and then they got the next 2 correct. So 5 out of 6, that's a very typical week, 83% accuracy ratio. I like this information, and you can see that, for example, here, the market went down, but they still made a profit. That's because they entered a sell contract. Another sell contract here. This is a buy contract because the price went up and they made a profit. So very, very good. I actually like looking at these to see how they made their money. And in cases where they got it wrong, why did they get it wrong? So good. A lot of freedom of information. I like that. So what are the risks? Let's be honest, every time you walk across the road, there is a risk. And certainly every time you make an investment, there is a risk. There are 3 key risks to look for. Number 1 is the broker that you're going to be using, in our case, Triumph, are they legitimate? Have they been around for a long time? Are they regulated? And you've got to satisfy yourself that they are indeed legitimate. Secondly, the fund managers, well, they could make losing trades. They could lose your money. So you have to look at what are the stop losses, what is the worst case scenario in a trading month, what are the things that are in place, and how much choice have you got? If you're not happy with the performance, how easy is it to get your money out of a fund and into other funds that are continuing to perform well? And thirdly, you are indeed exposed to currency fluctuations, or your money will be in US dollars, but if the US dollar went down in value against your own home currency, then yes, you will be exposed to currency fluctuations. That's actually worked well for me, because when I first invested, I was getting about $1.42 to the pound. It's now down to about 1.19. So the value of my own personal investment, the first investment that I made, has actually gone up by about 17% because of the strength of the dollar compared to the British pound. Compare that to the risks of a traditional investment. If you buy shares in a mutual fund or gold, for example, you are completely exposed to the market forces. So if the value goes up, so does your individual holding. But if the markets go down, so does the value of your holding. It's completely out of your control, and you are completely exposed to market forces. So what are the risks at the moment? We've got perhaps, hopefully, God forbid, the extension of the Ukraine conflict, COVID, inflation, interest rates, more uncertainty about energy prices, and certainly in the UK about who's actually going to be our next Prime Minister. Just on the words of, just have a look at this. Now, this is just one particular fund here. I want to draw your attention to here, these 2 areas here. 20% profit in March 2020, 20% profit in April 2020. Just think what happened at this particular time. This is when the first wave of COVID hit and global stock markets plummeted by over 35%. But because the traders can actually trade when markets are moving down as well as when they're moving up, they shorted the market, and they actually had their 2 most successful months of trading in their history. And that is at the time when global stock markets fell by 35%. So I ask you the question, where is your money safer? In funds that can make money when markets are falling, or in traditional investments which are exposed to the ups and downs of the market? So coming towards the end now, I just want to summarize and just show you what the next steps are. To summarize, the key benefits of investing in these managed funds is, in my opinion, it's about as recession-proof as you can get, because the traders can make profits when markets are falling as well as when they're going up. So it does not matter what is going on in the world. So long as the market, the traders call the market correctly, they can make a profit. The trader must have invested their own money in the fund. They are trading their own money, and whatever trades they do with their money, they do copy trading for us. Our money is pooled together, and it doesn't matter if we've got $100,000 or $1,000 invested of our own. We get equal treatment. We get exactly the same trades, and we see exactly the same percentage return. We also have an opportunity to switch into a strong currency, in our case, the US dollar, which at the moment is the strongest currency in the world. And I stress this is a totally passive investment. You do not get involved in any of the trades itself. It's a totally passive investment. So how do you fund it? You can do it, as I've done, through international bank transfer, or more commonly now, people are opening up cryptocurrencies. If that scares you, don't worry, just stick to the bank transfer. So I do two, both work. You convert your money into USDT, that's Tether, and Triumph absorbs the transfer fees on all deposits over $500, and there is zero commissions deducted when you put your money in. So if you put $1,000 in, that is what goes into your wallet, and that will be attached to the fund. There is zero commissions deducted when you put your money in. Withdrawals can be made at any time. Your capital, that's the withdrawals of your profits that are sitting in your wallet. The capital is actually locked into the trading cycle. The traders must know what they're trading with for each of the trading cycles, which are either monthly or 5 weekly. But at the end of the 5 week, you have a window to take your money out of the fund, your capital out, take it into your wallet, and then bring it back to your bank, either through the international banking system or into a crypto wallet, whichever you choose. And like with deposits, there is no fees taken to when you want to withdraw your money. It's very simple to set up. And when I've taken it back through the banking system, it takes about a week, so 5 working days, to actually reach your bank account. And people have asked me, have you actually taken out some large amounts of capital? Well, yes, I have, very recently. This is a piece of land that my daughter wanted to buy, and she had a mortgage agreed with her lender, but at the last minute, the lender pulled out. And so the Bank of Dad came to the rescue, and I had to get a substantial amount of money out of my trading wallet from my investments with Triumph, and I did so over 4 consecutive weekends. It took me a month to get all the money that she needed, but it actually happened. I actually was able to get the money over to her for her to be able to complete on this land. So I can personally vouch that, yes, you can get your capital out very, very quickly. It took me 4 weeks to get it out, but that was sufficient to secure the purchase of this plot of land for my daughter. So to summarize, we're talking about a broker that's got a 12-year track record. It is the largest broker in the world in terms of managed funds, with over $1 billion US assets under management. It's got the longest running managed funds. It's not a fund that I talked about because it's not one that I've invested in. It's the GM fund. It's been going for 85 consecutive profitable trading cycles. And you think what's gone in the world over the last 8.5 years, that is incredible that every single one of those 85 trading cycles has been profitable. Consistently high returns, typically 7% to 7.5% net return every 5 weeks, or 6% to 6.5% net return every month, depending on the fund. You've got a lot of funds to choose from, and you're free to choose and move your money about. You've got complete control of your money and no commission deducted. 100% of your money goes into the fund. It's all done on a profit split. So if at the end of the trading cycle, we get between 60 and 65% of the gross profit, and the fund manager keeps the rest. But it's like a no-win, no-fee system with solicitors. There are no standing costs. There are no administration charges. It is all done on a profit share. So if these traders are not successful, then nobody gets paid. And that's why they're so highly motivated to make good profits. And it's a very straightforward withdrawal process. You set your bank account up. So long as you've got money in the wallet, you press the button and you wait about a week and it just lands in your account. That's what's happened with me on many occasions. And your money, the maximum lock-in period is 5 weeks. So it's like having to go down to the bank or building society and give a month's notice on your ISA or savings plan before you can actually get the money out. That's the maximum, by the way, is if you want to get it out and the 5 week trading cycle has just started. And you've also got complete transparency. This MT4, MetaTrader 4 software, you can see exactly what is going on and what trades the fund managers have and the traders have put in on your behalf in real time. It's also affordable because the minimum Deposit in the vast majority of the funds is $1,000, which in UK terms is about £830. So that's it. I just wanted to just tell a little bit about my own story. What has it meant to me? Well, it's given me a reliable weekly income. I know the funds mature and distribute their profits every 5 weeks, but they're staggered. So every weekend, we get paid by a different fund manager. And I've just been paid today by one of the fund managers, one of the two that's based in St. Petersburg. That money has come in. And there's another fund, actually, the OILEX fund is going to be distributing its profits either today or tomorrow. So much so that I've actually given up my job as a part-time driving instructor, and I just freedom to live my life and spend it with who I choose to. So a little bit of some photographs. That's me prior to September 2021. I was a driving instructor based in East Sussex in the UK. In March, I went up with Gareth. We went up to northern Norway, did some cross-country skiing, and we saw the Northern Lights as well. Spectacular. If you've never seen them, phenomenal, absolutely brilliant to go and see. I have 4 wonderful children. 2 of them live in Australia. I spent the whole of April in Australia with them. And it's given me time to just do what I want to do because my money comes in automatically. My income is now passive as opposed to active. I don't have to go out and earn it because it's built up to a nice level. It's reliable and something that I can live off. And it means that I'm really retired now and I choose to go and spend time with my family. So how do you get started? Well, ask the person who invited you to this webinar, ask them for a link. And what I suggest you do is open a free account. Whether or not you want to fund it is entirely up to you. But I would open up a free account. It allows you to see this investment from the inside, actually see the trades, to see their history, to see what they're trading and how frequently they trade. So ask the person for a link, set up a free account. That's what I did. I didn't fund it at all for 3 months. I spent time just looking at it day after day, thinking, is this for real? Until I convinced myself that it was, I could get my head around it. I did not put a penny into it. It was 3 whole months before I decided to go ahead. So the 2 key questions, just to finalize that I leave you with, is what are your plans for overcoming the tough times ahead? We are in a recession now in the UK. We have booming inflation and energy prices, yet your money in a bank or bill inside your own stocks and shares are probably doing very, very poorly. So what are your plans? Don't say, oh, well, I couldn't do anything about it, because there is an opportunity to do something about it if you choose to. And secondly, do you think it's worth a trial? With $1,000 US dollars, do you think it's worth a trial for say 3 months in one of the funds just to give it a go? That's what I did. I was satisfied. I put a little bit more in and then I put some more in. But do you think it's worth a trial with $1,000 US dollars? Okay, those are the questions that I leave you with. I just want to say thank you so much for your time. Appreciate you giving up some of your Saturday. What I want to do now is hand back to Raymond. And if you've got any questions in the chat box, we'll gladly answer those. And I think Raymond's got 1 or 2 other investors who are going to just give a little their own story as well, so you're not just hearing from myself. So Raymond, I hand back to you, and I thank you all for your time. And I look forward to seeing you perhaps on a future webinar at some point in the future. So thanks, and bye for now.
Okay, thank you, Brian, for the wonderful presentation. It's very clear and concise. We will look at the questions again. Okay, before that, let me share with my experience with this investment. So my name is Raymond Ling. I'm 49 this year, coming 50. I'm living in my daughter 20 years old in Singapore, and I've been working since I'm 21, so over 27 years in the oil and gas industry, and it's very hectic and demanding environment from the bosses and clients. And during the start of COVID in 2020 May, I actually invited by Barney, my introducer, to attend a meeting with Simon Thompson presentation, and same what you all are looking at tonight. And I immediately love it so much because now I have a professional that actually trade for us and make the money for us. So I immediately registered account with Yuri at the time, and I put in my first $1,000 USD in this account, and that is when the COVID started, and we have a really hard time for the rest of the year and so on. So after 1 year, my company want to scale down, then most of us are asked to go, and I actually have the chance or opportunity to retire myself after that 1 year. And by that time, I already take back all my capital, and also by compounding during my occupation time when I have a job, by compounding all the payout and so on and roll the money. And I retire in April 2021. And now I have invested all the fund over the 5 network we have, and also monthly, weekly payout because of all the fund end on different cycles. And today we take average about 7.5% passive positive cash flow. That's the thing we are looking at for the weekly payout. This can provide us for the expenses that we have after our retirement. And now my daughter university fee also settled and paid by Triumph as well. And tonight we don't have any other. That's my start story. Tonight we don't have any other investor. Now we'll look at the question box. Okay. Right. Brian just answer one of the question. Do we meet with the trader in GMC in UK? No, actually most of us don't get the chance to meet with the fund manager or traders. That's their kept secret, even how they trade and so on. Okay.
Yeah, perhaps I can just answer that. No, we don't get a chance to meet.
Yeah.
I've met the directors, I've met the staff, I've been to the buildings, but I have not met the actual traders. They're not based in Nicosia. Some are based in New York. Others are based in London. Some are based in the Far East. Others in Japan. Some are in South Korea. So I haven't met them, but they have their own Telegram channel. So we get a lot of information from them. But I haven't personally met them. The other question that I've had to say is, thank you. Just want to bring you back to the returns on the investment. We're looking at an average of 100% returns, which is unbelievable. Yeah, absolutely. And that's why I spent 3 months before I put any of my money in, because I actually wanted to make sure that this was for real. I have been in these funds for nearly a year and a half now, and my only investment has indeed more than doubled. The returns of like 70 to 80%. I know it sounds incredible, and it truly is. But the beauty of it is that you're not going in market cycles up and down, up and down. Your money is out of the market most of the time, and the traders just choose the opportune times to trade, and that's why they're so consistent. But I have personally seen those sort of returns, and if you compound it, in other words, don't take your profit out, but you put your profit money in, based on past performance, and of course, there's no guarantee that past performance is going to be continued in the future. It's likely to, and you can think, well, it's a good guy, but there's no guarantee that they're going to continue to trade at these levels. But they have done in the past, and if you spread your money across enough funds, it's a pretty good guide as to what you can expect to receive over the coming year or 2 years or 3 years. But based upon past performance, if you put in, let's say, $5,000 a year ago, based upon those cycles, and you'd reinvested your profit at the end of each cycle, yes, you would have doubled your money in about 11 and a half months. It sounds incredible. I know, I get it. And that is why I spent 3 months doing this, because I just needed to get my head around it. But it's real. It really does work. Okay, thank you, Cam. Thank you for the presentation, Brian. I've also been looking at Triumph for about 3 months now, and I'm ready to invest. Cam, welcome on board. Great to have you. We went to Cyprus in May, Brian. Are you planning on organising a Seychelles visit to the Triumph people over there? Yes, yes, I am. I haven't got any dates yet, but yes, I do intend to go out to the Seychelles to meet those the regulators and the team that are based out there as well. I haven't got any details on it, but yes, it's as part of my ongoing due diligence, and it's also a lovely place to go and see. Yes, I am planning to go out to the Seychelles. I might. Does Triumph charge when we draw our personal accounts? No, absolutely not. There is zero cost when you put in, as long as it's a minimum of $500. Triumph absorbs all the costs of sending the money from their end. If you go through the banking system, you bring it back into, say, your HSBC account, then your local HSBC account may charge you for it. In our case, I think it was like 15 UK pounds, which is about, what, $17, $18.
Yeah.
But Triumph absorbs all the bank charges at their end, so long as the deposit or the withdrawal is over $500. Compound interest, the eighth wonder of the world. Absolutely, Cam. The eighth wonder of the world, indeed. Okay, I think we're done. So I'm going to say goodbye. I'm off to have a game of tennis now and enjoy the British summer afternoon. It's a wonderful, wonderful afternoon here. So thank you all. I'm going to sign off now, and I'll leave you in the capable hands of Raymond. Look forward to seeing you on a future webinar. We do these same time every Saturday and same time every Tuesday as well. So bye for now.
Thank you, Brian. Enjoy your game.
Thank you.
Okay. Okay. Now we no more questions from there. And okay, thank you for your attention and your question tonight. And we want to thank also Brian for his time and to do the presentation tonight. And like Brian say, this money is your money. You will decide when and how you want to invest, and you want to engage with us. And if you want to have any more questions, you can get back to your introducer, and you also can ask them the question if you don't want to leave any question with us tonight. And we do, like Brian said, we do this meeting twice every week on Tuesday and Saturdays in Singapore time, 8 p.m. So if you have another spouse or your friend want to attend this meeting, you can get your link on your introducer also. And that's all from us tonight. And have a good evening or good afternoon and enjoy your day. Thank you very much. Bye-bye.